Today I'm going to show you the best strategy that you can use to make almost $100 a day even with a small account. So stick around at the end of this video. So this strategy, I'm going to combine it with liquidity and market structure. So we are going to see where liquidity levels are hiding and how to consider them before actually taking a market. So stick around at the end of this video so you'll be able to learn something today. Okay, so let's go in the video and we see how to do it. So here we're going to consider only two pairs, that's Euro USD and GBP USD.
So this is my GBP USD 1 hour time frame, right? So this is my GBP USD 1 hour time frame. So what we're gonna see, right? What we have to first see is the market trend, right? Is it a trending market? Is it a ranging market, right? Is it bearish or bullish? So here, if you come to your market here, you first see that your market is really bearish here, right? So at this moment, at this recent market structure, you will see that it is kind of bearish because it's breaking lows. Okay, so here, if you come here, if you really come here, you will see that we started from here, we made this low, then that is the high. Okay, then this is a lower low, right? This is a lower high here. This is a lower high here. This is a lower low, right? Then this is a lower high this side. Then the market is breaking, right? This is a lower low the market has made, right? So we want to start from here and we see where to find our liquidity levels to look at before executing the trade. Okay, so now here, after identifying our break of market structure right here, okay, I'm going to just consider this recent market structure. After identifying our breakout structure right here, actually we had a fair value gap right here, though the market did reach our fair value gap here, and it made another breakout structure just right here. Okay, and now after making another breakout structure, guys, I want to show you where we always see liquidity, where our liquidity levels are resting, and like how do we identify it, right? So after this breakout structure, guys, right, we expect the market to go in either test our favorite gap and go down or to our order block, right? So here we having this favorite gap right here. This is our 1 hour time frame, right? We have this favorite gap that was here, right? You see that? That is the favorite gap that was there, right? So you can see that the market, it came, right? It broke this structure, then it came back, we tested, then it went down, right? Means now this one has become liquidity. It is no longer our point of interest. We no longer like need this favorite gap. Now what we do need is an order block above that. That what this is now a mitigated what? A mitigated zone, right? Now that mitigated zone, now it has become our liquidity. We no longer need it, right? So we shall look up and we see whether we have another fair value gap or another order block. Now we shall be considering that, right? So now, for example, here you will see that above it, above that fair value gap, we're having kind of like we're having our order block, right? We're having our order block here, right? We're having our order block here. Now this one became liquidity because this one now it is a mitigated zone, right? Means we shall be waiting for the market to come and fast sweep, right? It has to come and fast sweep that zone before actually we taking any trade, right? Now that is our liquidity, right? That's why you see here the market came and it actually came and cleared this liquidity before going down. Okay, so here if you drop your 15-minute time frame to get entry after market coming to your POI, right? Your point of interest, right? So this is our zone, right? This is the zone you're having. You see, this is the liquidity that was taken out even before the market going down, right? So here, after the market coming to your, after the market actually coming to your zone here, you see that it came, then there was a kind of consolidation. Remember, we had our break for structure here. This is our 15-minute time. So we want to get entry, right? So after that, we also had it made now this it made this lower low, right? After making this lower low, you will see that the market came back and we tested to our order block, right? It came back and tested to our order block right here. Okay, then here it will be a good zone to enter our shorty position right here, right? So this is where actually you would do enter the trade from, and you risk some small pips here, then you target your your high, it was where? It was here, this here, right? So yeah, it was here, right? So that's how you would actually enter this trade, but after taking out your liquidity. Okay, hope you getting it, guys, right? So that is the first example, guys. So let's go to another example. Let's go to our Euro USD and we see that how actually the market moved, right? So now if you come to your Euro USD trade here, right? Let me first remove this. Now let's go to our 1 hour time frame, right? Let's go to our 1 hour time frame here. If you come to your 1 hour time frame here, okay, if you come to 1 hour time frame, your recent market structure here, you come to your recent, the market is very structured on a higher time frame, but here, if you come to our recent market structure, you will see that here there was a break, here it made a break, this one, right here, there was a boss here, then we're looking at this low now, this low that made a break, right? This low, it was broken down, means the market had to first go down because there was a kind of change of factor here, right? So now the market was moving, was making higher lows and lower lows right here, okay? As you can see, it was making here, it broke the structure right here, then boom here, uh, right? Mm. Then we go, okay? So it was like that, right? So now let me show you where liquidity was resting before actually they moved to the downside, right? So here, if the market made a break of structure right here, okay? So now it first came here, there was a break of structure right here, if you see here, right? There was a break of structure right here. Then the market it first came to our order block right here. It first came to our order block and it mitigated. That means this one now it is a mitigated order block. It is a mitigated zone. It is no longer our point of interest. Means you look up and you see where there is an order block which is not mitigated, which is unmitigated, or a fair value gap, right? So now this one became our liquidity. Hope you getting it, guys, because it is already tested. Now it became your liquidity level, right? So now that is a liquidity level, okay? Because it is what it is tested, it is what it is mitigated. Now, if you look up here, you'll be able to see that there are different order blocks here. There is an order block here, right? There's an order block here, right here, right? So, the market just came, it just cleared this liquidity. We had a lot of liquidity here, we had also this one, we had also this one here, okay? So we had to wait until the market clear all that liquidity. And after market actually coming to your eye here, this is our point of interest, right? This is our point of interest here, right? It's our point of interest. Okay. So after coming there, you drop down to your 15-minute time frame here. Just drop down to your 15-minute time frame. Yeah, this is our zone here. We are considering. Okay. This is our zone we are considering right here. Let me first make it right here. Okay. So now after the market actually coming to your after the market coming here, you will see that you first wait for some good confirmations actually before taking the trade. Here, this was the liquidity that was taken out. Then the market came. After coming, actually, it made a failed. This is a failed what break of structure. Means it made a higher low, right? This is a high high. Now this is a higher low. Now this is the lower low, right? It made a lower low and a sorry, yeah. This is a lower low and a lower high, right? It made a failed break. Means it made lower high and a lower low, right? So after making a lower low right here, after making this lower low, okay, now this one was broken and we're expecting a lower high because the market can move up, down, right? So now here we'll just enter the market after the break, after the retest of this, after the retest of any other block, right? Above this, right? After making a new lower low, as you can see here, you come here and you look for some other blocks, right? Okay, so now and actually, there is a video I made about order blocks. You can go and watch it and see which order blocks we do consider before actually taking the trade. Okay, so we had various order blocks here. So you can see that the market was very good here too. take actual after retest of our order block. And in this one, we would put our stop loss right there, that lower high, right? And our TP actually would be here. Okay, it just be here. Okay, so that's how also this trade was taken. Okay, after taking out our liquidity level. So guys,